Bitcoin has hit a key bull market resistance level. Now, we've been following the entire bull market from the lows, as I'll show you in just a moment in case you are new here on the channel. Now, this isn't a video to make anyone fearful of what happens next. However, I think we should all be prepared when it comes to the emotions of the market, especially with what we've seen in the last couple of weeks with the extreme excitement around ETFs. Yet the chart might be showing us something different. Now, I want to cover the history of what has been happening so that we can look forward to what might come next. And of course, these are all ifs, then, buts, and maybes, but at the end of the day, the rest of us here, the mere mortals, do not have a crystal ball to the black side of the chart. We are just trying to be detectives in terms of what goes on in the market right now. So without further ado, you've hit your home of macro cycle analysis, studying Bitcoins, crypto, stocks, the real estate market, you name it, it is here. So make sure you do hit the subscribe button and follow along with the journey, because at key turning points, we have been there throughout the last several years. And typically at those turning points, we hear the exact opposite of what goes on in the market. Now, you might have been here since 2022 and you've seen a lot of these videos where we were looking at the bottom of the market for the stock markets, for Bitcoin, and of course real estate as well. But the signals go unheard because it's the exact opposite to what the masses are wanting to hear at that time. Here's a quick snippet from a video back in January of 2023, 12 months ago.
So while everyone is still wondering whether this is a bear market rally, is this really going to continue? And should we see some downside, people start to flip out and sell their positions because they're expecting prices lower than $15,000 on Bitcoin, this particular signal does not let you down in the long term. This particular signal has a huge hit rate. Now, of course, we're not looking for anything that's 100%. That doesn't exist in investing. There is nothing that is 100%. However, this thing has a very, very high hit rate. And like we talked about, this is based on Gann and Wyckoff analysis.
So that was taken right back at the lows, going all the way back to January of 2023. And we talked about it right at the bottom as well, even just before the bottom. Now, this clip is from March 30th, 2023.
You know, we've been talking about this since these October lows, since these June lows. The strength for the S&P, the area that most are not prepared for, is if this market gets back above 4,200 points. You can bet your bottom dollar the bears will be calling this another massive bull trap. They'll be calling it a bull trap all the way up to the double top, and you'll probably get rejected and they'll say it's back on. But that's just getting us prepared for what the media and what the bears are going to say at that point.
So if there's one thing I've learned about the game, it is mostly down to the mindset. Now, we obviously look at charts because we need to remove the emotions from how we trade and invest in the markets, but it gets the better of most of us most of the time. So if we can try to prepare for what they're going to do, and that being the media, that being social media, that being everyone out there at these extreme times, then hopefully we can see through the nonsense that we tell ourselves at those extremes. And those extremes can be the tops or they can be the bottoms. So we've been through a very significant low. Now, this one that we're potentially seeing at the moment, and I say potentially because of course prices can rise a little more, but I think it's just an intermediate point. It's an intermediate point in the overall cycle. Now, in terms of intermediate points, well, I think we're back on the run here from the bottom heading into disbelief. So we were talking about this many, many months ago. I know I keep repeating that, but it is really that important to understand where it comes from, because at the lows, trying to discuss the possibility of us running into a disbelief stage, you will see that it is met with extreme resistance. Now we're seeing the flip side happen. We're met with extreme resistance at these levels for BTC. We're met with extreme resistance when it comes to the mindset of the masses. The ETF, you're calling for things around 100 grand, 200 grand, whatever it might be, but there might need to be some sort of cooling off, especially after the news event. Does that mean we can't run to 50 or 52? Of course not, but we are starting to see some signs that the market wants to weaken. And we've obviously talked about the Wyckoff distribution, and I will cover that next week on the channel. So stay tuned for that. Hit the like and subscribe so you can see that content come up. But in the short term, we really, well, at least the bulls really need to see this thing continue on if all of the hype is warranted. As for the psychology of a market, basically it's the emotions of what people are feeling and thinking and how this thing works. And this is going to play a huge role coming into the mania stage, because when the mania hits, we see optimism, we see belief, we see thrill, euphoria, and then complacency. And this is where things get really bad for the majority of people. If you've been through 2021, let me know in the comments section down below, but you will know about these feelings and emotions at the time, and it's pretty hard to pick at that stage as well. The reason being is that you can't believe that the market will just stop dead. You can't believe that the market is going to turn at that point and potentially come back down. That's where we are met with complacency. So the complacency in the thought that, well, this market's just cooling off, we're going to see another rally. The problem lies when many traders or investors haven't seen the cycle through from the bottom. This was one of the biggest things I talked about in early 2020 and 2021, where if you're not following a market, the best thing you can do, even if you have no money, is to continue to follow the market through the good times and the bad times. I talked about it a lot through that cycle, because we know when the market breaks down, most people leave, they get bored and they don't want to be here. But they missed out on all of that opportunity to learn about what was going on in the market at that time, so that then you can reflect on where the market has come from. Because if you come back at the peaks, then it always seems like the market's going to be good. And that's where things can get a little bit dicey. The Wall Street cheat sheet, the psychology of a market, it can happen across all timeframes. It's not only just the macro, but it can happen across the shorter timeframes as well. Something around the intermediate, the medium-term timeframe, like we're potentially seeing now with the ETF. And we go through these excitements, but it's just with less people at this point in time. This is a chart that I hope keeps you extremely safe in the markets and shows you what can happen next and how to protect your profits if, in fact, you've been lucky enough to get some profits. This is what the masses do. This is what happens every single time, which is why we continue to get these cycles, and they happen in every single market. Now, if you're able to adjust your emotions to the right-hand side, then potentially you're going to make a lot more profits than the folks who remain in the left-hand side. So what is the left-hand side? Essentially, we're just watching the price chart run up into a peak, and the emotions that come around peaks and troughs as well. Essentially, what you hear at the top, and we will hear this even more so as we head into the greater, longer stages of the bull market, the later stages. The bull market is back, load up, don't miss out. This thing is going to go on a massive ride. So essentially, I'm going to load up before I miss out. That's the feeling. And potentially we're seeing that feeling at this stage in an intermediate sense. So at least this gives us an insight to what might happen next. And as I showed you in these previous videos, I really dive head deep, whatever the saying is, into the emotions of a market, because at the end of the day, that is essentially what most people do in these markets. Now, going head first into the emotions and how things work in the market is something that I've been doing forever. You've seen it in these videos over 12 months ago, and of course, they're even earlier in the piece as well. But it's so important because this is what sets the basis for your trading and investing. Now, at the bottom, like we saw this time around, like we saw in 2022 and 2023, not sure if the bear is over. I said it in these videos, I said it in this video here, the bears, you know who they were, calling for further downside. And this is the exact emotion they went through. They're not sure if the bear is over. It could be a recession. It could be anything. Maybe they'll buy just a little bit just in case. And what happens here with the red triangle is you start to pyramid into the market the wrong way. You start to buy a little bit here, a little bit more here, and then way too much at the top. And so if the market falls over just a little bit, all of those gains are wiped out. Everything that you bought at the bottom, absolutely wiped out. Now onto the right-hand chart, you should actually be increasing in fear as the market rises, hopefully trying to keep yourself in balance with what's going on in the space. When you start to see all of that greed come back, this is essentially what happens to the majority. The greed increases. You can see this nice big fat triangle as well. And in terms of how to invest the other way, then we want the triangle flipped upside down. We want to see the base being formed with the most amount of gains being made from the bottom, and then you invest a little less and a little less and a little less the longer the cycle goes on. The fear should increase but the money that's invested should be decreasing. Now, that's a massive insight into what I think happens next, especially in the intermediate term with BTC. Now, I think that's going to happen again as we start to pull out of whatever correction happens in the market, and that's what I want to look at next. Corrections for BTC, corrections for ETH as well. And then we start to go back into that ridiculous greed stage of the market where we should be increasing our fear when we start to see all of that greed come back. Now, we have to remain with the trend, but we have to be cautious with how much money we decide to keep putting into the market. In terms of BTC, we have now hit the next resistance level, that 48K. It's something that we've been looking at between that 42 and 48K. Is this top over? We have some early warning signs like we've had for the last several weeks with the possibility of it being a distribution. So I'll follow that up on the channel in next week's videos because I want to see a little bit more action play out here. But so far, in the last 24 hours, we've had huge volume come in on a reversal bar. Now, you guys who love your candles, you might know exactly what that particular candle is. And when you see that signal come at the end of a very long run, especially on extreme volume, and this volume is extreme, we haven't seen anything like that since the breakout in October, only just slightly higher. And then we haven't seen it since the March bottom, which was the banking crisis. That's the type of volume we're looking at right now. So does that mean it's 100% over? Not yet. We do need to see a breakdown of the tops and then the swing bottoms. But for now, we've got some early warning signs. The market is not pushing up as much as many are hoping it would. Now, I'm all for a massive bull market to come up, but we potentially see a correction. Now, if we are prepared for that and we do look to the downside for potential entry points, well, what we've seen in the past for BTC is roughly 20 to 22% corrections in this current cycle. So if we did come back 20 to 22% from the current prices, that would sit us out at roughly 38, 39,000 down to roughly, well, 37, 38. So somewhere between the mid to high 30s seems like a reasonable area. Now, if it did continue on that little bit further and we corrected more than what we've seen in the past, so these two corrections that lasted 2 months here back in 2023, you got it through the tops July to September and then April down to June. If we went a little bit further than that, we could potentially see something like, say, 25% goes down to 37 grand, which takes us back to the significant 50% level, which is basically the entire move up from September to the current top of January. So we're not saying that this is the final top, but just being prepared in case this is. We never want to try and call the top. We just want to be prepared for any potential downside and potential upside, because at the end of the day, the market is going to do what it does, and what it does best is make a fool out of all of us. And so we don't want to be here trying to call the market. We don't want to try and continue to short a market as it's rising. That is just going to get people destroyed. So until we see some breakdowns of the swing chart, so we got the swing lows here at 44K, we've got another swing low here at 43, and then a few more of these lows at roughly $40,500. Well, we have to remain with the trend, and the trend is still up. Although there are some early warning signs, they might only be enough to pause the market sideways. Now, if this market doesn't pull back that far, what would be the signs? The signs would be holding above the previous tops and consolidating. These previous tops come in at 45 and 46K. And so if Bitcoin's able to hold above those tops, consolidate, then it gives it a much better chance to break out of this particular resistance level and head to the next one, which is about $52,000. That's why I stress that it's so important to get in closer to the bottoms, because here is when the emotions get really wild. Back at the lows, it's much, much easier. So it's no point talking about that now. The only thing we can do is just stay with the markets if you want to do this thing full time. Ethereum's been the standout. It's pushed past a previous 50% level. That's from the top to zero, so 50% of the all-time high. That was roughly around the $2,400, $2,500 level. Now, if ETH continues on, we've got a price point at 2,900, so the 50% level of the entire bear market range here. So if it continues on, we can see what there is to the upside. You've got 2,900, then you've got the monthly lower swing top that came in 2022. That's at roughly $3,600. So two more areas for the upside for ETH, $29 and $3,600. In terms of pullbacks, if this tops here, so we could still head a little bit higher, but let's use the point from where we currently are at 27, going down about 25%. As you can see, ETH's done that in the past. 25% sits us out about $2,000. If it is to go a little bit further than that, do your 30 odd percent, say about $1,800 or $1,900. But to the upside, if it does happen to go that little bit further and come up and test 2,900, well, then we just measure those moves back down. 25 takes us to about 21, 30 takes us to about 2,000 again. And if it was to get all the way up here to 3,600, well, 20% only takes it back to 28, 2,900, 25%, a lot of numbers getting thrown out here, but basically 26, 2,700, 30% basically takes it back to where it is here at 25. And so with all of these numbers and all of these correction points from where it could go, it seems unlikely that ETH is going to trade under $1,800. ETH had some resistance, some support, some more resistance before it broke out at that level of $1,750, $1,800. And so with where we currently see it, it seems unlikely that ETH could get back to those levels. And so this is now how you could position yourself, as we looked at with the pyramiding for your investment plan, how you can position yourself so that you're not caught on the sidelines, hoping for lower prices like those unfortunate fools in 2022, hoping for $3,000 or $9,000 Bitcoin. It's been a while since I brought the numbers up in Aussie dollars. So just for the Aussies here, you can see where we sit on the SwiftX exchange here. They are a channel sponsor. Links are in the video description. Don't have to use it, but we are here looking at their charts with the Aussie dollar values. Sitting at 4,000 Aussie dollars is where the peak currently is. To the downsides are those similar levels to what we looked at on the USD chart, are roughly around 2,800 Aussie dollars. So ETH has hit roughly 4 grand Aussie. To the downside, looking at about 28 as a previous resistance level, which may become support. Now throw a few more in there for yourself just so that you feel prepared for any sort of corrections or moves to the upside, where this previous monthly swing top was at 4,700 Aussie dollars. Let's take a look at Bitcoin against the Aussie dollar. If you're not Australian, it's just interesting to see how ridiculous these prices can be outside of the US dollar. For Bitcoin against AUD, it's getting very close to $74,000, currently sitting at 69,000 Aussie dollars. Now, if we look at this in terms of the correction, similar to what we were doing with the US dollar, to the downside, about 20 to 22% would take us back under 60,000 Aussie dollars. Using Aussie dollars always does my head in as the numbers are so far out there. But just looking at the corrections here, something a little more extreme to 34, 35% would take us out to about 48,000 Aussie dollars. So it seems unlikely, but not impossible, unlikely that Bitcoin would see underneath 50,000 Aussie dollars again, just based on the chart and previous correction levels. So set your positions wisely, look at the probabilities, do what you need to do to get yourself set and not fall into the trap of the extreme greed to the upside and extreme fear to the downside and miss out on those opportunities. I'll see you back here at the next video. So until then, take care and peace out.